All right, welcome back, everyone. Welcome to a new trading week. This is Jeff here with FXMindshift, and welcome to your Sunday Easter review, right? This is the Easter edition. Happy Easter to all of you that are celebrating. Obviously we had some holidays last week. We had, Friday we had a holiday. Coming into this week, you can see from the calendar, we do have some bank holidays on Monday, right? So for Euro and GBP all day, we've got French, German, Italian bank holidays. Tuesday, we have no news, right? And then things don't really pick up until you can see Wednesday, right? Wednesday, we've got a bunch of PMI news folders for Euro, GBP, and USD. We also have a Bank of England Governor Bailey speech, right, at 1:15. And then Thursday, we've got an unemployment claims folder for USD at 8:30. And Friday, we have GBP retail sales at 2 a.m. So doesn't really look like it's going to pick up until the middle of the week here to start the week. So probably expect the beginning of the week to be slow to pick up. And then, Wednesday, Thursday, then we'll start to see some volatility kick in. All right, so let's go to our DXY chart. We're going to do our monthly top down as we always do. So if you take a look at the DXY monthly here, we can see that we have a bearish month, obviously, right? So coming off of the bearish momentum from last month, we expected this month to also be bearish. The first week of the month really was already, bearish, and it just hasn't really stopped from there. So you can see we've already come down and taken out this entire consolidation. All of these lows here, we've closed below this last kind of wick low over here, or we're going to close, it looks like, and then we're also filling in this imbalance, right? So we've got about a week left in the month. If the month closes bearish with this big bearish candle, then just like last month, we'd expect the next month to also continue the momentum and be bearish as well. We've got all of this liquidity down here, to target if we are going to continue lower. So, the monthly momentum certainly does not look like it's letting up anytime soon. So let's take a look at the weekly chart. Right now, the weekly, we can see that we have a break of structure over here, and we've also taken out this big structure over here. That was the wick that you saw on the monthly, right? And now trading into a weekly order block down here, which we're currently seeing a little bit of a reaction. But honestly, I don't really think this is going to hold. Like I said, the bearish momentum is really just too strong right now, and I would expect price to continue lower from here. Last week, you can see that we did not really do much at all, right? This is the last week's candle. So, we didn't move anywhere. We didn't even get past the wick of the previous month, right? The big bearish expansion that we got. So, I would expect price to continue down from here. We did create an imbalance just above here with that candle formation. Okay, so if price does want to come back and retrace into that imbalance to then go lower, that's also a possibility as well. But I would not be surprised if price, just kind of dropped further from here and just kept going and didn't even come back for this, right? So that's a possibility. Let's go to the daily chart here. All right, so on the daily, you can see here this little consolidation that we have going on, right? So last week, right here, this is last week's activity, really, all just right in here, right? We did not get below the wick of the previous week low, and we're trading now into this little daily imbalance right here, okay, which is that inside of that weekly order block, which is right here. So, this is what we're currently bouncing from, right? You can see that price has already made a shift lower, right, from the break of structure. This little up candle right here is our current daily order block, which price is respecting. As you can see, we tapped into it here, and then we dropped lower from here, right? So, like I said, I don't really, I don't expect price that needs to come back into this weekly imbalance or this daily imbalance here to go lower. It should, or it could, really just go lower from right where it is. Respecting the current order block here and just, seeing price go lower from here is not going to be a surprise. We've already gotten the tap into it here. So, coming down here or even coming back like this and then going lower once again, those are all possibilities that we could see the dollar doing. This week, like I said, the beginning of the week is probably going to be slow. So you might not see anything happen until Wednesday or Thursday when the news kicks in. So don't be surprised if we have a slow start to the week, right? And then after that, we'll see if we get that expansion lower, or if we get some sort of expansion higher for retracement, right? Either one of those could be a possibility. But that is what it looks like here on the dollar. Not much change from last week. Let's go to the 4-hour. Okay, now the 4-hour, we can see a little bit more structure, and we can see that this, inside of the daily OB here, right, formed here. So we had a little pop up. We took out some liquidity above, so a little internal sweep of liquidity here. And then we saw price shift lower, right, and break the structure. So right now we're seeing price retrace into the mitigation, and now we're seeing price drop from here. We're reacting from the mitigation to drop lower, and that's, you know, what I expect price to do. I don't think it needs to come back up into these areas here, right, or trade back into that, you know, that imbalance area to go lower. I think we could just go lower from right here from this reaction. And if we do get a retracement coming back to that structure, you know, and doing something like this, right? So seeing the lower time frame structure play out, the H4 structure play out as a normal, you know, bearish structure, lower lows, lower highs, right? So let's see what happens here. You know, after the slow start to the week, you know, back towards the middle of the week, that's probably where we'll see some activity, but we'll see how the week opens for us for the dollar. All right, let's go over to the euro dollar next. All right, so euro dollar on the monthly, as you can see here, we did not take out this high. Okay, so in contrast, the dollar, we did take out that low, right? So if we go over here to the monthly, right, we took out this low over here. But if you see over here on the euro, we did not take out the correlating high. So there is a little bit of divergence right there. And I would still expect price to reach for that eventually. But if we do see a big rejection from where we are right now, go to start the week, then, you know, it's possible that we see, you know, price kind of leave that there and just retrace. Okay, I do expect it to continue to go higher though, because just like the dollar, I expect to continue lower, right? I really don't expect the dollar needs to retrace higher to go lower, right? Just like over here, I don't think, you know, euro needs to retrace lower to go higher, right? I think euro could just go straight up, okay, and take this out. So eventually I think it will run this level, and eventually we'll run these levels up here as well. But we've got a lot of room for it to reach those highs. So, you know, these highs over here and over here and over here are all fair game. We also have a very small kind of imbalance up here as well that we could target to the upside as well if we really start to get moving and expand up there, right? So monthly candle is very bullish, right? Just like, you know, the opposite of the dollar. March was also very bullish, so this month we were expecting, you know, bullishness, and we still got it. We did take out this monthly structural high over here with a very, you know, convincing candle close, or it's going to close with a very convincing candle close above, right, if we stay above this. So I do expect the month of May to also continue the momentum and, you know, reach for these highs up here, right, or you know, inside of this range up here, the imbalance here and these highs. All right, so let's go over to the weekly chart. Okay, so the weekly, oops, this is a little straggler over here. So the weekly chart, we can see here the targets, right, the weekly order block up here and the weekly high that we did not take out. Okay, so those are the next targets that I would be expecting the euro to go for. You can see here the break of structure, right, and the imbalance that we left with that. So just like the dollar, we also created a new bullish imbalance here, right? And like I said, I don't really need it to see it come back into it to go up. I think we could just go up from here. If we go to the daily chart, you know, we can see the structure that formed here. We already tapped into this daily imbalance and we already see a push up, right? And so this is acting as a daily order block right now, where we can see a reaction and a move higher. So this is going to be the next target, this and this, right? All of these right here. So if we just move up from here, you know, it would not be a surprise. If you go to the 4 hour, we can see it probably a little clearer. That was that 4 hour order block right there that I just moved over, right? So this down move, right, did not continue. We traded into that daily imbalance. So if I put the daily imbalance back up here, you can see that's where it is right there. And then we basically traded above, right? So above the order block here, and we tapped into it again, and now we're pushing back up. So I really don't need to see price go lower from here. I think that we could see price just go up and take out the highs. We have our weekly levels up here, right, that we're looking for price to target. So I just want to see now price go from here to here, right, and take this level out. Okay, so short move, short distance. It's okay because the start of the week it's going to be pretty slow anyway, and with the bank holiday and everything, we probably won't see movement until Wednesday if it's going to go for these, right? So expect the early week consolidation to be slow for euro, right? Let's go over to GBP. Now GBP is a little bit different than euro. We can see that we did not also take out the high over here for GBP, but again, both GBP and euro showing us very strong momentum, right? So off of the previous candle, we can see it's a full body right now, probably most likely going to close as a full bodied bullish candle, and we're going to see if by the end of the month we can get up and through this high. Okay, and this is the draw liquidity that I have marked out next on the monthly. It's just above the 134 big figure, so not too far away, and based off of the momentum that we have right now, I expect that to be hit eventually. So let's go to the weekly chart here. All right, so the weekly, we can see that we have the weekly order block that we're trading into or going to trade into, and then on its way up to take out that high if we do take out that high. So if there is a reaction here at the weekly order block, that would be expected as well, and we'll get a retracement back into, maybe there's a weekly imbalance that'll be formed here or some kind of order block that'll be formed there as well that we can trade into and then trade higher. Okay, but I mean, based off the momentum from last week, we can see that it's very bullish, and I would not be looking to trade against that. So let's go to the daily. All right, so the daily, we can see here the last kind of big fake out move that we did below. We dropped lower here, traded into the imbalance, teed off of that, and then we took out the structure from that move, right? And so we have a daily break of structure here, and then I reach up into this daily order block, and those highs will be the next logical target. We also do have a imbalance here, which price could also reject from. We haven't quite reached that imbalance just yet, though. So we'll see if the beginning of the week gives us, something to work with here. But ultimately, we're looking for price to target the highs, right, and take out this this order block. I don't expect it to hold. If it does hold, then it'll be kind of like a short retracement. So something like where we tap into it and then get a short retracement back, back into this consolidation here or back into this imbalance maybe, or this order block, and then we see price go up and through, right? So that's what I would be expecting this week. And let's go to the 4 hour here. All right, so the 4 hour has already broken through structure over here, and then we've already gotten retracement back to mitigate the high of that structure, and we've already gotten a bounce through. So again, I don't see any imbalances below that we need to trade back into. I think that price just really should just go up from here, right? And if we do breach this, continue to breach through this, I mean, we already have a breach above. Just looking for it to continue on the structure and the move up. All right, and that is GBP. Let's go on over to gold next. All right, so gold on the, let's go over to the monthly chart. All right, so gold on the monthly chart, as you can see here, we have, again, very bullish momentum and order flow. This month, we are probably going to be closing as a bullish candle, right? And you can see the beginning of the month, we started off as, price retracing back into the range a little bit, but now you can see the push off and the blast through and the all-time highs that we've created so far. We're up to 3,000. It's the high we made here, 3,357.88. Okay, and still climbing. So 3,500 is in the sights, right? And that's probably going to be the next target that we can reach, another big figure level. If you go to the weekly chart here, we can also see that we have created a weekly imbalance, a new weekly imbalance here from the last week, right? The last one we traded into right here was where we got our push off. And now we have another one, a very, very tiny one right here that has formed as well, right? So again, I don't need to see it trade back into it. I don't expect it to from the momentum that we have here. I think price should just go up. But if we do, retrace or come back into that level, that is a possibility that we can see price bounce from there. Although it would be very, I would say, not a very high chance of that happening. If it does come back, I would expect it to come through and maybe, retrace a little bit further since we are above, we're reaching all-time high levels. So we're expecting some sort of correction or retracement soon, which we don't, we haven't really seen yet. So if we go to the daily chart, and here's the weekly imbalance. If we go to the daily markups here, we can see the last imbalance over here. So we have a daily imbalance that we created. Okay, and inside of that daily imbalance, we also have overlapping this order block right here. So if we do see price retrace back into here for a bounce up, that would also make sense. So coming back into here, bounce into there, and then continuing up to that 3,500, 3,400 levels, right? The next big figure, the next all-time high levels for liquidity, right? So not too much that I can kind of impart here. It's really just going to be seeing if price does come back into here or if we just keep going. So on the 4 hour, right, and the 4 hour, we have this imbalance here that we tapped into, right? And now we're seeing price go. So again, don't need to see, another tap into this level. This price should just go up from here if it's going to go up. And then once we cross the threshold of high there, then we'll see if price wants to continue, making higher highs and higher lows as we go up. Okay. All right. So let's get into the indices and the futures. Let's go over to NASDAQ monthly. Again, we didn't really have much of a change, right? So the monthly chart, you can see, is very bearish right at the moment. I do have a big retracement from the current monthly candle, but we did take out some significant lows on the bottom, so sweeping that level. If we close the month with a big wick like this, then obviously I'd expect, some kind of retracement. So back into the monthly imbalance here, that would be the first real logical target to see price come back into, and then a continuation down after that. Or if we don't see a retracement and we see price continue from wherever we close this month here, then we'll see a little retracement and then a continuation down. But overall, right now, the momentum is still very much bearish, right? If we go to the weekly chart, okay, we can see the last weekly imbalance that we tapped into for this big move down, which then broke structure and took out all of these other weekly structures over here, which then caused this big retracement, right? So coming back to the retracement level or the mitigation level here, and then seeing price react lower, okay? So that's where we're currently at for the weekly. If we go to the daily, we can see where exactly that daily and that weekly kind of coincide here, or that reaction. So it was daily order block over here that we traded into, and then seeing price now kind of consolidating at this reaction. Still looks kind of, still looks like a bearish reaction to me, so it looks like we will go a little bit lower. I don't necessarily think that this is going to continue to go lower from here. I think we'll probably go a little bit lower and maybe pop back up again and consolidate. But if we look at the 4 hour chart, we see this a little bit more clearly in terms of what I mean, because we did get a reaction here above in this H4 imbalance area. You can see that we did come down here, tapped into this mitigation, filled in some of this imbalance, almost 50% of this level, and then we saw price push up from that imbalance and then continue to consolidate. So we had a couple of gaps in the market. So we had a gap higher, which we tapped into this high, and then we saw a reaction from that, and then we gapped back lower, right? So this is really just a big solid consolidation here, that sideways consolidation, that we're not really coming out of the range yet. So I really need to see kind of price go out of this range right now for a clear direction. So either we come up and we break above the highs up here. So I could do, if I can grab it, I could do the draw up here as well. If we do eventually get back above, it's just that right now we're below gap here. So I'm more so targeting the lows below this low here, and then to fill in the rest of this imbalance. That makes more sense to me right now, price to do. So that's what I'm expecting price to do. But if price were to get back above this gap, then I would be looking for price to run liquidity above. So we'll see what price does this week, because obviously, in consolidation, it's 50-50 either way. It really depends on what price wants to do, once we see the structure form. And right now, for me, the structure is still bearish, right? And it still looks like we're going to continue lower and run for the lows down here and fill in this imbalance, right? So that's what I'm looking for. If price were to somehow make it back above this gap this week here, then of course this would be the more likely target. But once again, this is a consolidation, right? So it's going to ping pong between highs and lows, and then eventually we'll get a break and a decent move. So right now we're just not seeing that on any level, right? Which is why it makes it so difficult to trade right now. The volatility is still very high though, right? It's still very, very volatile in the markets. I would not, be treating this as kind of like a slow market by any means. Even though, the moves are slow, the movements, points wise are still very significant. We're still seeing, 300, 400 point days, and some moves on the lower time frames are even, 100 to 200 points each movement. So it's not, slow per se, but it is slow in terms of, watching the charts consolidate and the candles form. Looks like it's slow. Right, so trade with caution if you are trading NASDAQ. All right, let's go over to ES. The ES is pretty much the same story. I mean, we have pretty much the same structure all around on all the time frames. So we do have a monthly imbalance just like we do on NQ. We did come down, we took out some big, structure and liquidity below the lows. Difference here with that we traded into an imbalance and we are mitigating the high of this swing here, right? And then we saw that as the reaction, but overall it looks pretty much the same. So again, if we do see a retracement, coming back to this monthly imbalance would be a target if we were to start to see bullish retracement back into the range. But again, if we do see price just continue lower from here, that would also make sense. And then we would just continue to see that wind down. On the weekly chart, right? This was the imbalance that we traded into. And then we also formed another weekly imbalance that we did not get into this week here, right? So we can see it's a bearish candle that we did. We tried to, almost got there, but we didn't quite get there. And then we kind of dropped lower. So right now, this is kind of where we stand, right? Seeing if price, if it does come back into this weekly imbalance here, well, then I would expect that to be the reaction point for price to go lower. But if price drops from here, that would also not be, uncalled for either. If we go to the daily chart, right, we can see this is the daily imbalance here that we're trading into and reacting from. And again, the movements are not very strong. Like we're not seeing a very strong reaction, bearish reaction to this imbalance. So as it is, we might go a little bit lower, but I'm still thinking that we're going to stay inside the range until we see a nice break or a nice displacement above or below this range. Okay, so ES right here on the 4 hour, we can do the same, pretty much the same range, right? This high to this low, inside this consolidation, you can see the gaps as well. So again, if we stay above this gap, or I mean, like I said, if we somehow get back above this gap here that we traded below, then of course the more likely target is going to be that we take out the high of the range. Okay, and as long as we're below this gap right here, and we're staying below this gap, then this down here is going to be the more likely target. So short-term low here, these lows over here, right? And then ultimately targeting this wick, and then for price to come in and fill in this H4 imbalance here. All right, so that's what we have for this week. And that's pretty much going to do it for this overview and the analysis, right? So hope you guys find that helpful. And of course, my goal with this every week, as I say every week, is for you guys to be able to take this information and, find some amazing setups for yourself and for your trades next week. If you have any questions at all, go ahead and drop some comments below the video for me. I will get back to you as soon as I can. And for those of you that are interested in joining us in the VIP, where I trade with my students live every day, Monday through Friday in the New York session, link is in the description below. There's a free 7-day trial. You guys can get involved. And like I said, if you like it, you stick around. If not, you get some free value out of it, right? Free for 7 days, cancel anytime. And, we'd like you to stick around, though, and see you in the community. All right, guys, that's going to do it for me. Enjoy the rest of your weekend. Happy holidays.
Feel me.